Hello everyone, welcome to the second part of paying zero taxes on your stock market profits. If you haven't watched the first part yet, please take a look at that as well. The link is in the I button above or in the description box below. So in this video, we'll be taking a look at another strategy using which we can pay absolutely zero tax on all your long-term capital gains. The name of this strategy is called loss offsetting. What does this strategy involve? How can you make use of it? And the mathematical demonstration of this strategy. All of that, let's find out in this video. Alright, so before I take you through this strategy, take a quick recap first. Whenever you hold stocks for more than 1 year, they come under the long-term capital gains tax structure. And the tax on the profits is 10%. However, if your profits are less than 1 lakh, you do not have to pay any tax. For example, if your total investment is 10 lakhs and after let's say 3 years your investment becomes 15 lakhs, so your total profits become 5 lakhs. Because your holding duration is more than a year, you fall under the long-term capital gains and you will have to pay 10% on your profits. Because your profits are 5 lakh here and 1 lakh profit is exempt from any tax, you will have to pay taxes on 4 lakh worth of profits, which will be 40,000 rupees based on a 10% tax structure. Now I'll tell you how using this loss offsetting strategy, this 40,000 can become zero for you. So let's begin. Now, a lot of people don't know this, but you can use your losses in the stock market to reduce your total tax outflow. So you will have to pay tax not on the trades that are profitable, but on the overall profit after reducing the losses as well from the profitable trades. Confused? Okay, let's take a look at this mathematically. If you invested 10 lakhs and the value became 15 lakhs after 3 years, your profit is 5 lakhs. But because taxes are exempt on a profit up to 1 lakh, we are only going to talk about a profit of 4 lakhs in this case. Now, on this 4 lakhs, you can reduce all the losses that you have incurred in the stock market. So you do not need to pay tax on this 4 lakhs of profit. You need to pay tax on the number, on the value that you arrive at after reducing all the losses from this 4 lakhs worth of profit. But let us understand which are the categories of losses which the income tax department allows us to offset from the overall profit. There are 3 categories of losses that you can use to reduce your overall profits. The first one is short-term capital losses for the past 8 years in the stock market. What does that mean? If you have incurred any short-term capital loss in the stock market, which means if you have held the stock for less than a year and sold it, and the loss that you have incurred on that trade, you can combine all such losses for the past 8 years, which means all the losses from 2015 you can combine, add them up and use it to reduce your overall profits. The second category is the long-term capital losses in the stock market, again for the past 8 years. Now, if you have held any security for more than 1 year and you sell it after that period and you have incurred a loss on that trade, again you can combine all such losses from 2015 onwards, which is 8 years back, add them up and reduce your overall profits. The third category is the long-term capital losses on sale of any other asset class such as land. So if you have sold a property and you have incurred a loss on that and you fall under the long-term capital tax structure, you can use that particular loss also to reduce your overall profits. So mathematically, let's take the short-term capital gains as X, long-term capital gains in the stock market as Y, and long-term capital gains on sale of any other asset class as Z. If you add all such losses X plus Y plus Z, you can reduce this total component from your overall profits. In the example that we are talking about, assuming that your overall profit is 4 lakhs and let's say all this x plus y plus z equals to 4 lakhs, then effectively you will not have to pay any tax at all. Now, a lot of people don't know this, but they get emotionally attached to the share, to the stock that they have bought, and that has ended up in a loss for them. Because of this attachment, they are not able to sell that stock because they want to get out of it from a profit perspective only. But remember, even if you are making any loss in the stock market, please be sure that you use that stock to reduce your overall profits, and hence you can also reduce your total tax outflow in the stock market as well. Alright, this was the second strategy, which we call loss offsetting, using which we can reduce our total tax outflow to the extent that you can end up paying zero taxes on your long-term capital gains. Now, this is just the second part of the entire series of reducing your overall taxes on stock market profits. There are a ton of other methods, the videos on which will be uploaded shortly. So please make sure that you subscribe the channel, follow us on Instagram and watch all those videos as well. Alright, I hope you enjoyed the content. I'll see you the next time.